Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market roared back this week from very depressed lows, as investors took hope from a pending $2 billion stimulus package, and went bargain hunting as the major indexes had a 20% leap off of their pretty depressed lows. Our indicators actually showed them massively oversold, and our very short-term indicators in nearly every stock in our 300 plus stock universe were extremely oversold. So the bounce was expected, even hit our upside projections that we had given to our members this week. And analysts are writing, well, this 20% rebound, well, the bear ends. New bull market. Well, I say to that, total garbage. The past week saw just a tremendous amount of action and this big lift coming as Monday started really weak, however. They were limit down overnight as it appeared that there was not going to be a stimulus deal out of the Senate, and gold exploded on the prospect of the amount of printing that the government was going to be doing. But Tuesday saw the Dow rocket to the upside, 11% for the Dow, over 9% for the S&P 500, as the biggest gain since 1933 just completely painted the tape in green. Gold moved up over $100. There's just its own story there for gold. There's a shortage of physical gold because of hoarding, because of mines being shut down, and there are delivery issues, and the futures are in a state of backwardation as there's a huge scramble for gold going on right now. It's settled down the last few days, but I'll tell you, we're going to show you as we get into the short-term view, there could be more where that came from. Wednesday, well, we had a deal in the Senate come at 1 a.m. in the morning. Both sides had agreed. And there was a huge rally going on that day on Wednesday, but then a late sell-off took away a lot of that as, of course, investors were afraid to let a rally get away from them. And there was talk that Senator Sanders had come out and said he was threatening to hold up that bill. There were things in there he certainly did not like that favored businesses over people. And then that coincided with Apple coming out and saying they were going to delay 5G phones out till 2021. So that had the market selling off with Apple, and the market gave up a lot of the gains on Wednesday. Thursday, well, the claim for unemployment, those were 3.3 million. That is 5 times the old record, an incredible number as the economy shuts down over the coronavirus and people scramble to get compensated from unemployment. The number probably was not as bad as some expected because the market moved to the upside very, very strongly on that news. And news came out also about the Fed buying of their QE program, $622 billion of treasuries and MBSs, mortgage backs, over a 3-day period. Their balance sheet climbing beyond the $5 trillion number. And I'll tell you what, it's going to be $10 trillion because they are nowhere near what they're going to end up doing to deal with the shutdown that's going on right now. I have read things that I thought were brilliant regarding that the cure is worse than the disease when it comes to the financial condition. And if you think the Fed messed things up in 2008-9, well, they are incredibly destroying what's left here right now by this massive amount of QE that's going on. The dollar on that gets absolutely crushed, and stocks soar on this kind of buy the bad news event. Maybe 3.3 million people, maybe they thought it was going to be worse. Stand by, it's going to be. Friday, the market moved down again. World markets were under pressure. They did not follow through with the U.S. The numbers coming out of the U.S. for coronavirus cases getting worse, especially in these horrible pockets of areas like New York. So those numbers have people shaken up, and when you get a huge rebound like we've had here these last few days, well, then the sellers, well, they come out, and I don't blame them. I've got more to say about that. If you followed us for a while, you know our analysis was way ahead of this. We saw the bear starting, called it well before the devastation. And now we believe that this false economy that we've had for all of this time, a decade more, well, it's now in a reset. The market was setting up for this bear. Our government did it. COVID-19 was the trigger. It's horrible what people are going through, and so sad for the people and families that are losing loved ones. Since that time, when we gave these warnings, we've done 5 special reports, several videos with big picture analysis for our members, and all of that we said was pointing to a much longer period of financial distress. So here we are, a month off of those highs, having lost 35% and then rebounded back and had a 20% gain off of that. Well, that's just all part of what was going on, and this very long-term situation, which we think is going to be pretty bad. Most people are in the same quandary, this question. They have big losses in their accounts. They have job losses, of course, many of them, and government action has given them hope. So the market moves up, and the question is, do I sell? No, they're thinking, I need to get more of this back. I'm still down so much, some people a ton. And analysts are telling the story, the same one that they told for the last 11 years, that they have, when they've seen these down swells, well, nothing like this, but they keep saying market recovery. Even somebody that's managing some of my money that I have, because I don't dare put it all in my own hands, same message that they're putting out. Markets recover, got to stick to the same plan. They don't get the reset that's going on right now. They say the Fed is helping. You have short recessions. Most time when you have recessions, by the time they hit, the market's moving up again. They're still in their old paradigm. Your job is now, because these fund managers are not going to help you, is to take care of yourself. Right now, you're working on your physical health. You're doing what you need to do. You're isolating. You're keeping social distancing. You're washing your hands. You're doing everything to take care of yourself physically. Well, at least I hope you are. Well, now it's also about your financial health. We think these rebounds that are going on here are a time to lower your risk. It's time to use these big upward pops, and you have to sell into the teeth of them. When they look the best is when they're giving you the best opportunity. We've talked for months here, a couple months at least, about lowering your risk. Beginning of the year, we talked about this peak coming and the big decline into the spring and into the summer. Well, it's here. You get these big upside peaks. Lower your risk. The great reset is on. All right, so what did the markets do for the week? Well, the major indexes, they popped like 10-11% overall. There was there was a net increase of about 20% off of their lows, but they did have this 10 or 11% gain depending on what index you're looking at. The bonds in a relatively narrow range, 30 years up about 3 points, the 10-year yields falling about 16, 17 basis points, and the short end of the yield curve is steepened because the short end of the yield curve is at 0. In fact, the 1 months had dipped to negative interest rates, so you invest in a 1 month and you're going to get less money back than you gave them, which makes a ton of sense, right? Gold, up $140 plus on the week. A massive move and a huge change of tone. Silver up $1.85. You know, when we had the big stock market collapse and everything is limit down overnight, we saw what happened. The bond market soared, and we saw these interest rates go to, well, the 10-year down to under 0.4%. That's what happens when you get these crazy markets going on, and that's what's lifting silver the way it is now. It's not because of any economic boost. It's because of the flight out of the dollar that we saw going on as the dollar moved down this week. So silver was where they reached because of this physical shortage in gold, but we still don't know if that's going to continue. Silver made gains on the silver-gold ratio this week, but we need to see if that's going to continue. It's really gold that looks like the place to go, and I'm going to show you where I think the buy area on gold is. We've had a tone change in there, and our analysis has changed also, so hang in here. You'll see that at the end of the show. The dollar moves down over 2.5%. Now, that is a huge move, and it's all about the amount of printing that this government's going to be doing. You know, they're going to be potentially trying to liquidate the whole world here. And that's, of course, on everybody else's back. Everybody here is going to pay for that. And I think that the dollar has made a major top. Now, there's a lot of analysts out there thinking that this flight to dollars and the dollar shortage that's out there is likely to continue. There is a dollar shortage, but when you're printing unlimited amount of dollars, well, in this country, that's going to alleviate some of it. The pressures are coming off of the short end right now, though they are still buying a massive amount to do so. And the world, other countries, other huge institutions that have debt in dollars are really struggling with that. And that's where the shortage of dollars coming in because there is very few reserves out there in a lot of countries when the dollar is the reserve currency. So that's what's going on there. But the dollar had this huge decline, and that tells you that something is getting solved in that regard. Oil down about 220. It is very weak. Groping for a temporary bottom, in our opinion, and OPEC trying to do what it can to regroup in some way, but I think that they have some absolutely major issues going on. So that is the opening in here. I want you to follow us on YouTube. That means become a subscriber. If you like this show, please give us a thumbs up. And I want you to share this. Share this with everybody that you know that has interest in the markets. Have them also become a subscriber. We want to really build our subscriber base in here. That helps us a lot. And that also is a way that we hope that we can help people with what we think have been quality messages and quality type of analysis that we've been bringing you. And that's our greatest desire, is to really bring information that is very high quality and very comprehensive and allows investors to do the best that they can to maximize gains and to get out of the way of some of this crazy markets, massive markets that we have seen with these huge swings. Also go to Twitter. We put a ton up on there right now, and follow me there at askSlim. So really want to encourage you to become a YouTube subscriber and follow us on Twitter. That is the opening comments, and I've got a ton more to show you. Right now what I want to do is I want to go to our new Trade Ideas platform. I want to give you a little idea of what we're offering for level 3 and 4 members, and here you can see right here is just our new beautiful Trade Ideas platform. Down over here is a lot of trade ideas that we have put out, but now we have a way that we can essentially bring it all in one page that you can see. I'm just going to give you a peek of what we have open right now so you can get an idea of this. But what we do is we give you this list. You can see that we had Oracle, NVIDIA, IWM, SPY, Facebook, and Caterpillar. Those were all shorts that we just put out in the last 2 days as we saw this market moving up. And some of those don't get executed because we give you an entry range, and because it's the highest quality entry areas. So we want to do that always so that you can make these entries on these trades where you have the greatest potential of a positive risk-reward situation based on the analysis. And then if something is not working out, we have reevaluation points. And what's really spectacular about this is that we give you targets based on our analysis, and then you can just basically pop open the information right over here, and you can see our trade page right over there, which gives you all of our analysis, the technical briefing on that, which really shows you what we're looking at on that trade. We try to do somewhere between 1 and 4 of these every single day as we share our analysis with you. You can get this by being a level 3 or level 4 member. All you have to do, if you've never tried us before, is write to Matt at askSlim.com, and he will send you a special link for a trial membership, and you'll be able to get a discount then on that to give this a shot. Of course, everybody who gets this is getting everything. If you do level 4, well, you get everything in all of the other levels. And if you do level 3, the only difference is you're not going to have our live charts on Thinkorswim, but you'll have our static charts, and you'll have everything else in level 3, 2, and level 1. So just a tremendous amount of information. Write to Matt at askSlim.com, and he'll be able to help you with that. So that is the beautiful new Trade Ideas platform, and of course we're always bringing upgrades to you in everything that we do, and these things continue to change. So write Matt at askSlim.com, and he'll even give you walkthroughs of these things if you want to do that. He spends time with you live and really helps you understand what we're doing in our platforms. All right, so now we're going to switch over to the best and the worst for the week. And what we want to do now is go into the charts that we look at. When I do this segment, I'm often looking at things that are moving in both sides of the market in pretty much of a balanced way. Well, you can believe it, this week there was nothing balanced about the way things were trading. The up stocks were enormous on the upside because they're making these big rebounds from depressed areas. Remember that there are existential threats to many, many companies out there. And that's the reason they got sold and down to these incredibly low levels. And now they're rebounding because, well, they look like bargains because the Fed is coming out and printing money at rates that are incomprehensible, and all of those believe they're going to be saved. But a stock like Boeing, who has recently asked for a $60 billion bailout after they spent more than that on their own stock buybacks, well, they're going to be given a $17 billion bailout, but that's not going to be enough for them. But the rebound in Boeing has been incredible, and it's been way beyond what we think can hold up anymore. There's just so many companies out there that are going to be in huge trouble, and I'm going to say this right now and say it again. There should be no bailouts of companies whatsoever. That's how we got to where we are right now. 2008-9, the moral hazard. Companies believe that they can just spend money frivolously. They don't need to save for a rainy day. There's no cushion. Well, the rainy day is here, and a lot worse than that, of course. And these companies are facing a horrible situation that the government, they might need to print $30 billion, $30 trillion, to get these guys out of trouble. There is so much corporate debt out there that is going to be just underwater. Let's take a look here at Boeing right now. Here's your Boeing pattern. We saw the stock, of course, move sharply to the downside when it went into all of these problems about the 737 MAX. The stock moving down from $446 over here, falling to $89 over here. And in just this month on the downside, it gives up from $340 to under $90. We have two cycles in here. This is our cycle brackets that we look at. And you can see the blue one is the dominant pattern. And if you follow the patterns here on the smaller one, you can see how I'm tracing out the smaller one. So we have two what we call out of phase cycles right in here. If you're interested in our cycle analysis and you really want to learn this, it's time for you to go to our website, 2 Cycle Workshops. And there's a very extensive video there, of great information. And we are now offering a special in there also, 30% off. This is the right time for you to be getting our cycle analysis workshop, spending more time at home, 20 video modules, and you'll learn how to do charts like this, learn the important messages of these kind of negatively configured cycles that you have here, the important breakdown levels, how to do the support and resistance zones, and come up the sell zones so you know the spots they're likely to reject from. That's what you want to do, and you can see that in Boeing right in here. As it bounces as it's supposed to right off of that minor low right there and up into the resistance area right over here. This pattern is suggestive of a decline that's further coming, and that area under 100 is very likely to get tested again on the downside. Boeing, we think, is in massive trouble. Right now, the airlines are in massive trouble. They're not going to be able to buy a lot of airplanes. There are companies that are going to go out of business. There are planes that are mothballed. The problems are just unbelievable. And Boeing is not something that is investable in our opinion. You might buy the stock at 80, at 50. I mean, I don't even know. But, this rebound that you see in here where the stock goes from 89 all the way up to 187, so that's a double in 1 week off of that low. You better believe that's a sell area, and we have it marked in here. This is more than double off the low. Argus raises its target to 220. Interesting. There's the 220 number right there at the top of that lower resistance zone. I can't really argue with them. I suppose it's possible that the rebound will get crazy and get up that high, but then again, I think it's under 100 after that. Boeing, a very sick-looking stock, up 64% on the week. Let's look at another one that's up 64% on the week, and that is Spirit Airlines. You can see the cyclic action in here. It is perfect rhythms. You can see that in here. It comes down to the buy zone. You see that right there, very late in the pattern, and explodes back up. But then it starts tracing out negative patterns. And when that happens, it's in a lot of trouble. It resists the sell zones. Learn how to put these in. Write to Matt at askSlim.com and get that 30% discount on our cycle analysis workshop. This is the time to do it. This is the lowest price we've ever sold it, and we're doing that because this is the time when you're sitting at home that you could spend the 15, 16 hours that is in this workshop in just the video modules. There are many other videos attached to that from our library that go with it. You'll end up watching potentially 30 videos to learn this. It's amazing. It sounds overwhelming, but this is really the way you're going to change the way you look at charts forever. Here you can see right over here the rally up that came into this lower resistance area and then bounced. It was as low as 7. It's probably going down to $5 over here late in the summer. The summertime is when we have most of these things projected for an important low. KBH, KB Home in the home builders area. By the way, before I get too far, Delta rallied 36%, JetBlue 35%, American Airlines 33%. Those big gains there in those airlines, they're all sells based on everything I just showed you also in Spirit Airlines. KB Home, analysts are all over on upgrades and downgrades, and they have no clue. Analysts don't even know what to do with a market like this. Well, at least most of them. And now you can see our lower sell zone right over here. So the stock could get it up to maybe 21.5 to 25 right there on a rebound over these next few weeks. But that's the area we think it's going to be a sell, and we think that no matter how low mortgages get, it's not going to matter. And the reason is because the consumer is going to be in so much trouble here. And there's no bailout that's going to help them. How fast do you think that companies are going to be rehiring? How much damage has been done to them? It's tremendous, and you're not going to be able to get. Maybe I shouldn't be using that tremendous word. It's not, and you know why, don't you? It's not going to be able to be something that is repaired anywhere near that quickly. It might take 2 years longer. So KB Home, rallying probably 22 is a good area to be selling this stock, up 57% on the week, and I'm telling you, analysts are all over the place on this one. DFS, this is pretty representative of what we see in the in all of the credit cards and credit card processing. Visa gets a big jump also. on a rebound, but I think that one is also a sell. This one rallies 50%, gets up into that sell zone also. You'll notice that most of what I'm showing you has got projections out here that last for at least another month on this rally. So they're going to keep trying to get up into these areas. Everything looks like a bargain, but then this period out into the summer looks dreadful. DFS, we think it is a sell on this rally. Cruise ships, well, what can you say about them? Who wants to take a cruise these days? How long do you think it'll be before you decide to be captive on a cruise ship again? Here is perfect cyclicality. You can see the low here and the nested low. The rally and the nested low. When you get into nested lows is the biggest sell, the biggest sell, the biggest sell, all perfect. There's a minor cycle in there that you can see clearly here, and oddball because, well, you can't see it here because it was super strong. See the momentum turnover right here? That was your signal that there was trouble right there on our momentum indicator. That's on all these charts. You can see that very clearly as the cycle then begins to push down and the stock falls to 19 and a quarter. It then rallies all the way up here to $50 because, well, the bailout may be that they don't have existential threat. Maybe there will be in business. How long do you think it's going to be before a cruise line is going to be able to make money again? Is this stock worth $50 where it ticked up to? Well, of course, now it's back down to 33. Gets anywhere near 45, 50 again, you can see what you need to do. So this stock looks just absolutely terrible. Gains somewhere near 40% on the week. The question is, are they even going to qualify for aid? So many of these companies in the cruise line area, they did what they needed to do to be offshore and therefore not subject to U.S. taxes. Well, they certainly shouldn't be subject to U.S. bailouts. I actually think, when you look at this stock, up 40% and the Carnival Cruise up 30%, these stocks have bankruptcy risk in my mind. I'm not telling you that I know anything. I'm just speculating here, just my own opinion when I look at this, and I cannot imagine how these companies are going to make it without having some serious retrenching in companies like this. This whole category of hospitality, well, I think the hotels will bounce back better. I think that a lot of them have the ability to do that when we get past the coronavirus issue. They'll bounce back better. I don't really think the cruise lines are going to do absolutely that well. So that is a look at, did I say the best of the week? Wow. Take a look now as we switch over to a few stocks, 5 of them, in the worst of the week. I don't have many to show you. And as a matter of fact, I'm showing you 5 retail stocks. These stocks, of course, subject to the consumer coming and buying normal things, staples, all of that. But Bed Bath & Beyond, that's been one of the stocks that we have had as bearish anyway. And Bed Bath & Beyond, you can see this downward trend on these major cycles. These are long negative configurations that you see right over here, and we have the colored phasing in here, the rising phase, the corrective phase, and once it breaks below these lows, the bearish phase. See, the bearish phase goes right to the cycle bottom here, the bearish phase right to the cycle bottom, and the same thing now. Guess what? It's bottoming. Bed Bath & Beyond is probably could get a rally coming up pretty soon. Here's your sell zone. If it gets up to 730, it's 460 now. That's the kind of trouble this company is in. And if it gets a rally in here, what would you do with it? You can see we're giving you the sell zone. By the way, I did a video yesterday where I looked at the 50 high cap stocks and sector ETFs. Don't miss it. This kind of analysis I give you on every one of those stocks. The 5 or 6 top heavyweights in each of the sector and the Spider Select ETFs. I give you this kind of analysis. You don't want to miss it because you probably have a ton of stocks in there. And what I showed you probably amounts to a representation of the entire S&P 500. So maybe it's 80% of the S&P 500. So you're going to want to watch that video. This is Bed Bath & Beyond, and I think it is beyond repair. Next one we're going to look at is Nordstrom. By the way, Bed Bath & Beyond is 78% off of its high. and no rebound. Really, there must be bad news coming out about this stock when nobody even wants to buy it now, even on a week like this. Nordstrom, well, it's a similar situation. Maybe they're not in as much trouble, but you could see the cyclic patterns in here. There is your resistance zone right here. Maybe it can get to 21 over this next month. It got this week on the rebound up to about 20, so why not, right? But what would you do at 21 to $24? I would sell it. That's just me. That's down 10% on the week, as Bed Bath & Beyond was. And Macy's is the next one. Another one that we think has got existential threat to it. The stock falls under $5. This one is interesting because I'm going to show you these last three cyclic harmonic families right there. And you can see the low right over here and then the minor cycle right in here. So you have the second minor cycle and then the bottom. The rally gives you almost nothing. And then the first minor cycle turns down and is a little late. So there's a rally doing here. Maybe the stock can get to $8. It's now $5.40. It doesn't look like it's got anything in here, and this decline goes all the way out until June, July. So the stock is probably going to $3.50. I mean, you get a rally in here, I don't know. I mean, this is one of those stocks where you figure that any analyst looking at it or any fund manager that has it in its portfolio, we got to be fired. That is a look at Macy's. The next stock we're going to look at in here is another one that was down. Macy's, by the way, down 9% on the week. We'll look at Walmart. We're going to look at Walmart and Target. And these are interesting ones because they were subject to rallies on binge buying. And you can see the cyclic patterns in here. Note all the green support zones because you can see that that's been a stock that has been more favorable, right? It's been in this upward trends and they have loved it. And the binge buying that we saw in the panic got the stock way up here to a new high, 128 right there, and then it gave it all back. It's getting down to the lower support zones right in here. So this optimistic area of rally here, I doubt it. They're probably going to suffer also from, even though they're selling, they've sold out of toilet paper, they've sold out of paper towels, they've sold out of canned goods. Most of the other stuff is not going to be selling. And if the stock gets under 102, it's going much lower. I would say the next level is down over here around $86. So watch that 102 number. If so, we'll be reprojecting this in here to the downside. It will have gotten below this lower support zone right over here. And any hope for it to get up back into these areas again will be gone. That's a key level right over here. And you can see that it failed. It failed at what really is a double top here and gave up a tremendous amount of the gain. So that stock could be in trouble. Down about 4% on the week. But certainly it's not a company in trouble. So somewhere down the line here, it's going to be very investable. And we don't want to say anything bad about Walmart right now because it just might be technically drawn down by the flight to cash that we have going on right now in this inflationary environment. Now, Target didn't do that. You can see I have the Target and Walmart cycle patterns in here overlaying each other. This one right over here, if I highlight that, is Walmart. This one right over here is Target, so you can see how the cycles kind of track each other. And the low doing here and for a rally, but again, the Target, you see it rallied right over here. Look where momentum turned down. The stock was at 128. It falls over here all the way to 90. So just the cycle pattern showed you it was coming down, but we didn't know it was going to be this sharp to the downside. There's a rally doing here. We would think it could get up to 100 to 106. And that's where I think it is a significant sell. Analysts downgrading this stock like crazy this week, and it's only down 3% because the market was up on such a big rebound. So that is a look at Target and what I think is a stock that is going to give you some kind of a rebound because I see these patterns right in here, but then an opportunity to exit longs because you can see 1, 2, 3 positive cycle configurations and then the breakdown. When you get a breakdown underneath and you get a negatively configured cycle that closes lower than it started, the probabilities of failing in these areas of the resistance zone are over 70%, and then the probability after that rally of taking out this low are the same or worse. So you can see our projection in here is based on what we think are the highest probabilities based on formations. That's how we get this. This is an art form. But the art form is based on a lot of science, and it's a picture of money flow, and we want to understand that looking at this. Please do take our cycle analysis workshop. Write Matt at askSlim.com, and he'll send you that 30% discount link. All right, so now what we're going to do is switch over a little bit, and we're going to go from the best to the worst of the week to our investor pulse. This is a very interesting segment that I started, and now I'm going to be bringing it back most of the time, depending on the market. And what I want to do is bring you a look at, that's the trade ideas, but I'm going to switch over to another aspect of our site, which is the Slimulator Momentum Tracker. What I'm showing you here is a level 1 membership product. This content is beyond belief. And what I'm going to do is a little bit of analysis right in here and let you see the market conditions. And we'll look at some that might have changed a little bit. So you can do a single search in here of any symbol that you want. We've got more than 1,000 symbols in here. And what we're looking at in here is momentum. And we're looking at a 3-month plus perspective when we look at that. You can see in here we have all of these different sector analysis and watch list, and we're going to be adding to that all of the time. I got a new one coming in here for you futures traders that is going to be the futures ETFs, and you'll be able to extrapolate the futures trading from those ETFs. So well, you can even build your own watch list in here, and I think it's just phenomenal. What I want to do is I want to look at the S&P 500. This is a big list that's going to take a little bit of time to load up in here because of the 500 stocks, and there you can see it loaded up. What I want you to see is we have a proprietary directional bias indicator. It's just uploading again because it needs to finish, and it does that every 15-20 seconds. I'll turn that off in a second. Of the 500 stocks in here, I want you to see that 90% of them are in a negative momentum condition based on our directional bias indicator. And you can see all of them right in here. I'm not scanning in here at all, but I'm quite capable of doing that. So the conditions in here are really, really bad. There's only 1% of them that are in positive and 9% in neutral. And this is one of the worst situations you'll ever see. So that will be changing along the way as markets start to heal by a little bit and start to rally. But I wouldn't be surprised if this didn't ever get to the 50% number in here while we're in an upside correction. If I switch over right over here and I look at the NASDAQ, which I want to do, and I'm just going to pause that feed in a second. First, I want to switch this over to the NASDAQ right here. And I'll pause that feed so it doesn't do that. And you can see that the NASDAQ is actually in a little better shape. And some of the NASDAQ stocks that were great haven't quite broken down yet. And there's 4% of them are positive, 76% negative. So it's still a very horrendous condition that we see in here. So I'm going to go back and look here at the S&P 500 because I want to get a sense for stocks that may be looking like they're viable or maybe still investable. And I can get that by doing a little bit of a search. So I'm going to go here into the scan mode and we will scan on intermediate term bullish of the 500 stocks. And we'll see which stocks come up. It's going to switch over here and let me know which stocks are bullish intermediate wise, and you can see that there are just basically a few of them, and these are signals that came to us in the last couple days. I'm going to pause that feed right over here and just kind of give you an idea of what might be a positive stock. Let's just go back to the charts for a second. You can see, let's just look at Gilead, which has look at Gilead right here, which has been acting in a positive way because they have a COVID-19 they're working on a COVID-19 treatment, and you could see when the news came out, it moved all the way up over here. So we have a buy zone in here. So this is actually in pretty good shape, and I wouldn't be a bit surprised to see this stock moving up pretty sharply again. Let's just take a look at Citrix right over there, which is showing you a bullish, it's scanned on this, so it's showing you a bullish intermediate pattern right over there setting up. So I'm just going to switch over and look at Citrix. We'll just leave Gilead and go CTXS, and you can see in here on our analysis that it is looking like it is, making a cycle bottom here. Look at this week, incredible, getting back up to a high. So this is just a great looking way to just continue to do scans and give you a good sense on what is strong. You can see Regeneron right over there is another one. Clorox is looking okay. Those are safe haven stocks. Kroger also. So this is how you could see, well, which stocks do I want to buy, or which stocks are not likely to give a lot of ground. Well, there was 6 of them right here that came up on the scan. So I wanted to show you that so you could see how to use this. There's just so many other ways to use this. I'm just going to resume that feed right over there, and I'm going to turn off the scanning right here. It is off. Okay, stop the scan. There you go. And there's just, you can use this. We're just going to see which are long-term negative or long-term positives by just doing the sorts on here, or intermediate term negative and positive. And there must be a few things that turn to short-term positive. Only 3 of them that you could see right in here. Citrix is then one of them again. So tremendous that you can use this, and wanted to make that our investor pulse today and just give you that list of those few stocks that are showing a tremendous amount of resilience in here for investors. I hope that you found that to be valuable in the investor pulse. There'll be sometimes when I do this, when I use that in a way that is much more in a market that is much calmer, and you'll be much more interested in investing or potentially selling stocks that look really bad. When there's 90% of the stocks in negative momentum and negative direction, it's pretty hard for me to pick out a stock for you to sell. Well, that's why I did that video where I looked at the 50 high cappers on Thursday, so do watch that. If you want our momentum tracker, you could just become any level member. And if you're an entry level type person, Matt will send you a level 1 half price link so that you can try that out and get it. And I think you'll find that phenomenal. So that is Investor Pulse. And now we're going to go to what you've all been waiting for in here, and that is the short-term view for the next week. We're going to look here, as we always do, at 5 major markets: the energy market using light crude, gold, the dollar, the bond market looking at the 30-year, and the S&P 500 looking at the stock market. We're going to look at 1 to 3 weeks out. I'm going to give you the sum of the evidence, bringing together both intermediate and short-term analysis, and you'll be able to see what we think is going to happen in the short term. Again, we're looking at only the next 1 to 3 weeks, and every week is like a year right now. So there is a massive moves going on, of course, in this market. So now we're going to switch over. We'll go from the Citrix chart right over there on the weekly to moving over into the light crude market /CL, and we're going to switch this over to a daily chart. And look at that. So that's what a chart looks like when it's got 1 million drawings in over 2 years. But then all you do is come right in here, and it makes a lot more sense. So you can see the cyclic action in here also. We had talked about the fact that we thought that light crude was bottoming right in this area. You'll note this dashed cycle line right here. It's because we could see the shift going on, momentum very negative, and it gets this lower resistance zone, really keeping it from being able to rally at all. You can see the pattern in here. So it made a low here of 2052, and with a low due in the next 2 to 4 days, it's probably going to take out 2052, as you see right there. the economy not supportive to energy right now, certainly, as nobody is flying or driving very far. And this is the fact that supply-demand situation is really in dire straits. So we're looking for a bottom to form in here, right around this area in the weekly and the daily charts, and that says that we're likely to get a bounce. So we have a potential test of this area over here down around 20, and then we look for this rally. So this is 27.5. You can see it got here a week ago up to about 28. We're going to look for that decline, test the lows, start to move back up. Some hope about OPEC trying to reassemble. That's really the sum of the evidence, that they're going to try to do something, and a bounce looks like it's coming, but it's a terrible market. And trading the bounce in here is really for very short-term traders, day traders. Momentum in here very, very weak in all time frames that we look at. And again, you use the momentum tracker, and if you then will have the ETFs in there, and you'll be able to see all of the futures conditions when we add that. Now we're going to excuse me, switch over to the gold market. I have to get a little sip, talking too much. Am I talking too much? Here is the gold market. So we have a mess here when you look at that, right? You had this double top, the panic in the market going on, this big decline right over here from 1718 all the way down to a low here of 1462. This is a flight to cash, a deflationary scenario that pushed our dominant cycle shifting over one full minor. So these are the minor cycles right in here. And now with this rally in the shape of it, we have definitely entered into a revised situation where we have this big rally that took you all the way back up to 1713. 1718, 462, 1713. That makes this only a rally phase that is only a week old. We're consolidating sideways in here in this minor buy zone. This level right over here around 1606. This level here around 1638. In our opinion, this is a consolidation, and we're going to get another spike up to this area. The intermediate patterns have suggested 1725, so we think it is a buy, and we think that it's likely to move up strongly to that 17.25 area very quickly, and that's based on the government trashing the dollar in a massive way. They don't care about how much they print if they can save the world, no matter how much it'll cost the world moving forward. So that it means that they're going to print and print and print and print until they're done printing, and they think that they saved it all, and they stole all that money from anybody who's a saver, anybody who wants to be able to buy something with $1, and anybody who is a child or grandchild of who I'm talking to right now. They're stealing money from them right now, and the gold market is likely to respond to that. It's a safe haven security, and you could see it acting that way, and this pattern has become very positive. So we're looking for a rise to 17.25 plus in this next 1 to 3 weeks, and then correcting, and then this rally over here could very well be 1800s. This is right now the probability's changed to a very strong condition that we see in here. The momentum, look at that green arrow, slim ribbon turning positive. Projection oscillator not even able to tick down at all in this little corrective area. So QE Infinity revised this, and that means that we're likely to see gold moving up again. You can see the buying coming into the stocks also in the gold market, but not quite reflective of what I see here, and that's because the gold market and in the stocks, they're subject to the liquidation in equities, but not so much in gold. Remember, gold has got a physical shortage going on right now, so physical gold a lot more valuable and a lot more desirable than paper gold right now. So it's going to take much more of a rally, I think, in the gold market to get the gold stocks to really get pumped a lot more. And actually think that's coming. So there's a pretty good potential for that. Some of the evidence between the backwardation, the amount of printing, the hoarding going on, mine closes, is that there's an upward resumption very likely. Momentum turned positive here on the short term. The intermediate term is still negative after having this big decline. So it's got some repair work to do, and we think it's going to be turning up on the other time frames also. So that is a look at the gold market, which we think is getting ready for one more or many more upside spikes. Watch for the impulses to give you the information. And for the momentum, you had this big negative impulse and momentum turned negative, the big positive impulse and momentum turning positive. This is a very rare occurrence right in here, and I believe this upward momentum is changing very significantly. That is a look at the gold market, and the next thing we're going to look for is the dollar market. Now, if there's a shortage of dollars, when you look at this last week, you've got to say, well, the correction was due. This is a buy zone, and it's pretty likely that this market is going to peak over that. That is an important peak, but then it probably has another little rally over here. So maybe this is a period where you're going to really get your opportunity to buy in gold. We're going to look for a couple days down, another attempted rally over here, and then a big decline potentially coming in the dollar market. This huge amount of printing that's going on, QE infinity really is not a good thing for the dollar. And I'm telling you, the amount of money that you saw the Fed print right now, well, they're going to do that again because they're not going to have a choice. And depending on what the other countries in the world do, will really dictate how much of a decline you get in the U.S. dollar. If the U.S. dollar is the source of reliquidating the world, well, you could get a 20% drop in the dollar. So we think that you're going to get a little bounce in here, but some of the evidence is that this looks like it's becoming a major top, and that, of course, would be very supportive to the gold market. I don't want to mention Bitcoin much in here because I'm not a Bitcoin fan. I think that a Bitcoin is a farce. However, I think investors are going to look at that also as a potential safe haven. So Bitcoin is in a little bit of a period where it can continue to rally. We had that kind of laid out. But I do think that Bitcoin ultimately and the whole crypto complex is going to go into a crypto meltdown of some significance. So I'm not going to show you those charts, but I will bring another special on that down the road. So that is a look at the dollar. Next thing we're going to look at is the bond market /ZB. By the way, that dollar rebound is up to about 100 to 101. So that's probably what we'll see. This looks like, to me, that the bond market is about to come down again. Now, you can see the patterns in here, the way they're setting up. The momentum in here is still strong. What I'm seeing is this big break right over here. This big squeeze came when the equity markets were in lockdown, essentially. They had hit what's the word for it? The safety points where they shut the market down overnight, 5%, and circuit breakers, sorry. And so they reached for bonds because they had nothing else to do but reach for bonds. That's what's wrong with circuit breakers. All they do is mess people up. And then they broke in a big way. So this was around 192. This over here was around 166. What a move, right? From down over here in the mid 160s to 192, all the way back to 166. Momentum still up, but this cycle is getting ready to roll over. We have the ZBs as a potential sell in our trading ideas. Again, please do become a level 3 or 4 member to get those. And this is where I think there's a high probability you're going to get a drop in here. Now, this might be creating a diamond. And if it is a diamond, then this downward projection is too steep. This upward move is too shallow. And that would mean you'd just get maybe a week of some decline in here. You'd get some more rally as the diamond completes and then have the big breakdown. So while I have this targeted back down to that low at 166 over the next 4 to 6 trading days. That's pretty unlikely when I see the positive momentum in here. So we'll probably get a minor decline, some more rally out in this area, and then the bigger break back down below 166. The bond market is now starting to look like it's beginning to price in the inflationary scenario, or the fact that the Fed will be printing so much in here that there will be, between the shortage of goods being produced and the massive amount of dollars floating out around there, that there's going to be an inflationary scenario going on. When you look at the grains, which were showing a positive situation in, and you see corn is on our positive list on the trade ideas. It's I think that the commodity markets are starting to reflect that. Between gold and grains and other commodities, there are shortages of commodities and too much money. And under that condition, the bonds are not going to do well. So we think that the sum of the evidence is suggestive that we're going to get 2 waves to the downside in here, a downside wave somewhere in here that is probably minor, and then a very large wave in here that takes you down into May. What is this time frame when I look at this one right over here? That takes you to May 12th, as you can see, as where we think that big low is, and that lines up with the weekly pattern. So that is a look at the bond market. Man, am I giving you a lot here. It's incredible. Do become an askSlim member and help us continue to bring this kind of information to you. This is a look at the S&P 500. Well, this is classic. What I told my members last week is that it was pretty likely, in a special report, because I didn't do market week last week, that it was pretty likely that this low was going to come early. You can see this was 20 days, 20 days, 20 days. That's this low, that's this low, that's this low. All of those 20 days. And then this, because of the super depressed and really oversold condition, we were suspicious it would be early. That was only a 16-day cycle, so there may be a little shift in here. And we thought that the rally would get you up to these areas here, 25.5 to about 26.70. Well, look where we got, right there, and then we had this gap downside today. This still looks like it's going to chop around a lot in here before it turns down and then maybe tries to bounce again. This is all relative to the sum of the evidence telling us that we're probably in an upward correction going right now that could last quite a number of weeks. Continue to chop around in here. We're going to look at the support zone as the downside minor support that is going to create a range. The range being this area around 2660. This right over here is 2472, and this is 2360. So 2360, 2660, chopping back and forth, moving sideways, implied volatility likely falling off in here and continuing to fall off. We had it up in huge numbers, and maybe it's going to fall even into the 40s in this area over here. But then at some point out over here after this rally, we think that come May, June, July, the next collapse is going to be out there. So this is a period in here where we see the sum of the evidence as range bound. As things got too cheap and then things look like they're the place to sell it, and you keep bouncing around in here. We're going to call a 300-point range in the S&P 500 for quite a number of weeks, 2360, 2660. That might help you, those of you that like to use strangles in there. And momentum, you can see, is still down. There's been a sell pending in here now for a few days on the projection oscillator. So there's a strengthening that's occurring in here. We'll probably see some dip for further down in here. And then if we continue to be able to hold in this range and keep getting down into these into the lower level here, you'll probably keep getting pops into the top of the range. So outside of any disastrous news that comes out right now, we're going to look at that range and here this very wide chop. We think this area up here, for those of you that did not sell or when the market was at 33.90 up 3 up over here, or when this turned negative and got to the sell zone, this was all the warnings right in here. If you didn't sell, change your allocations at that point. This is the area to be doing that. That's my very educated opinion after 45 years of doing this. I traded, I think it's 10 bull markets and 10 bear markets right now, starting back on the floor in 1974, traded that 1974 bear market, Traded all of the crashes all the way up through now, and I'm telling you that my very informed and experience and the technical analysis that we have in here now says this is the time to look to take care of yourself financially as well as physically. This area right over here is a problem for the market, and if your portfolios have problems, well, this is what I'm telling you is the highest probability. Top of this area right over here, 2780 approximately. I think it would be an extremely rare condition that could get it up there. 2760 right over here is really the peak that I'm looking for, and it probably tries to get up there a number of times and trades in this zone. I hope this was unbelievably helpful information for you as we bring you the most in-depth and comprehensive analysis that we hope anybody can bring you. And my team is just incredible. Between Matt and Arvi and Brian and Tom and Erica and Idea, I mean, all of those people working so much, our analysis going on early morning to late night. Please do become an askSlim member and support us. Use these amazing products and sign up for our cycle analysis workshop. The more you support us, the more we can bring you, and that's exactly what we want to do. I want you to be so incredibly careful. Talk about crazy. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my friends. Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been